Very good afternoon, everybody. We are in this Kenstone podcast. So, today we are going to discuss. I'm Nikhil again. So, I think I've done more than 150 videos. So, you guys should know my name. But still, once again, I'm saying that this is Nikhil Shetty. So, from Kenstone Capital. So, here we are creating awareness about. I think all this while we have been talking, length and breadth on what a credit score is, how it impacts an individual, getting into details about the credit reports, which was applicable largely from a individual perspective. So today we're gonna create a video from a business perspective. So CIBIL is applicable, or a credit score is applicable for both individuals as well as businesses. So today our entire conversation is going to revolve around businesses. So for businesses, there's something called CMR ranking. It's not a score, it's a rank. So I have Harish here, who literally manages the credit repair program for Kenstone Capital. So, and he's also a credit repair expert for businesses. He advises a lot of small scale to large scale businesses from their credit report aspect whenever they raise funds, whenever they have an issue raising funds because of CIBIL or because of credit report. So he's the one who is an expert who addresses all those issues and help them access credit by fixing all those issues. So welcome, Harish, to the podcast. So we are absolutely glad to have you here, and I think with this conversation we're going to help a lot of businesses become aware of what a CMR is, and then I also to a certain extent identify issues, not to an extent that what you can do, but at least we can help them identify those issues. And if they're facing trouble, then they can anyway reach out to you for further.
Absolutely. So great to meet you on a Sunday, first of all. So let's first start with why banks require something like a credit report, right? At the end of the day, this entire concept of this credit report or commercial credit report for banks is to safeguard their interests. At the end of the day, they want, because banks are very cynical when they are lending, right? So they exactly.
Right.
So
obviously, if I have to give my money to someone, some random guy, obviously I'm cynical.
Yes. So it's all about mitigating risk. So because they are, at the end of the day, they are lending your money. So they have to be so extra careful. And this all started probably 10 or 12 years ago. So before that, it was very working in silos. All the banks used to have their internal review and go ahead with lending, which again led to a lot of NPAs and banks going bankrupt and all. That's when all these banks came along and said, we need some centralized or a consolidated data which we can review before lending. So that's where you have this entire concept of having a consolidated credit report, where every bank sends that data to a central organization or a team, which again has a repository of all this information, which is helpful when the bank wants to lend again. So that's the whole concept of having a commercial credit report for every lender. Every borrower.
Borrower.
Yes.
So it is called commercial credit report.
CCR. So it's called a commercial credit report, where literally the bank can check the entire history of that organization in terms of their access to credit, on how much access they have as a working capital or as secured, unsecured loans, who all are involved in the operations of that company, pretty much the entire repayment history of every loan that they've taken. So all this gives them a guideline in terms of whether they can lend them, offer them a new loan or not. So these are all their guiding aspects, basically. So that's how it works.
Fantastic. So basically, bank bases its decision on CCR to lend a new financial assistance.
Correct. And purely to mitigate the risk. They want to be sure.
Mitigate the risk.
Yes, they want to be sure that my money that I'm going to give is going to come back. So this is one of their guiding force to do that.
I think come back without any friction.
Exactly.
Correct.
Exactly.
No? So this friction is another challenge for a lot of lenders, wherein they would have lent money
Correct.
then they have to struggle to get the funds back is trouble actually.
Exactly.
Even I as an individual don't want to face that. If I lend some money to one of my friends or a family or an XYZ, I don't want any friction in between.
Correct.
So I think bank, if they are lending crores and crores of rupees, obviously they have to have a mechanism to identify the friction, right?
And then if you see, right, from a bank's perspective, everything is cost. The more it goes into, there are delays in collections and all, it's an added cost which keeps on increasing the
Right. It's a business.
expense, right? So if I want to run the bank in a profitable way or in a proper manner, then I need to mitigate all these things. I need to make sure that these things are reduced to as much as possible. So that's why you have this whole concept of a credit report where the bank can do a review along with the rest of the parameters when they are considering to lend. So that's where it all started.
I think we should add this perspective as well.
Correct.
So to both individuals as well as businesses, that I think that bank is also a business.
Exactly.
Which is there to make money, nothing else.
Yes.
So if they are lending, they want to make more money on that.
Correct. So it's all about the financial discipline that you as a...
It's not charity.
Yes, exactly. No, because again, bank is lending your money.
Correct.
Right. So it's actually lending the depositors money. So they need to have all those things in place to safeguard their investment.
Understood. So one of the risk mitigation component
is the credit report.
CCR.
CCR. It's
businesses.
For businesses.
Commercial credit report. Fantastic.
Exactly.
So let's dive in a bit into CCR, commercial credit report, to create awareness to all our viewers. I think many of them would be running the businesses for sure.
True.
So let's dive in a bit into this CCR in terms of what a CCR is and what are the components that is there in the CCR which our viewer should become aware so that they can identify, mitigate that, or resolve those issues then and there, or never get into those kind of issues itself.
Yes. Because as a business,
as a precaution.
Yes. So not just from the bank's perspective, they do it to reduce the risk in terms of their investment. But you as a borrower or a business owner, you're also responsible to make sure that to keep a track of your creditworthiness.
Absolutely. Precaution.
So that, because you don't want to have surprises when you apply for a loan. You don't want to get into those surprises.
Absolutely.
Because
especially from a business perspective, I don't want surprise.
Exactly. So it's extremely important for you as a business and your accounting team to have a very clear understanding on how the reporting from the banks is happening to the credit bureau. Is there any misreporting that's happening? We'll come to that later on what are the things that affect your ranking. But all these things happen a lot. So it's extremely important for your accounting team, you as a business owner, to also have a visibility to all this data on a monthly basis to keep a track. So that when you apply for a credit facility, because a lot of times this review of the credit report happens right at the fag end. And you don't want to get stuck. You don't want your loan to be stuck right at the fag end when you have all the other plans in place and suddenly you realize your 5 crore CC facility is stuck because of your credit report. That's going to take your business into a spin. So,
and a lot of plans would be dependent on that 5 crore CC.
Exactly.
Which would be coming in.
Exactly.
And if banker is saying that, boss, get this fixed and then come back, I have no clue how to, no clue how to fix this.
True. So it's very important from you as a business owner to also keep a track or keep a look into your data.
The data that is being reported.
Correct.
Amazing.
Yes.
So now let's dive into the CCR and let's be specific about the components that's involved in the CCR.
Absolutely.
And let's give a very simplified version.
True.
The moment we get into too much of technicality,
correct,
our viewer might not understand, because we have been doing it for quite some time. Because of which we understand.
Correct.
They understand their businesses but not CCR.
Perfect.
Right. No. So from a layman perspective, let's dive into CCR and let's break it down into each one of its components. And let's give a simplified version of
Sure.
what it is.
Sure.
So first component, what
Yes.
is this?
So what rather I would start is, now we understand the importance of the CCR
Absolutely.
as a banker and also as a business owner.
If I have to take financial assistance
Yes.
for my business, CMR or CCR is important.
Something that is very important. Now, first thing that we need to do is, how do I get this CCR as a business? How do I get this CCR?
Correct. Know how to
Exactly.
access.
So we'll start from there. So the perception is that only bank have access to your company's CIBIL report or company's CCR report. That's false. That's a myth. So you as a business can actually
that
purchase.
is also there.
Yes, exactly.
In the market. Okay.
So this entire
people think that only banks can access.
Exactly. So you as a business, you can have access to your credit report. So you can visit. CIBIL is one of the companies which actually maintain the credit report for all these businesses.
The CIBIL is government company?
No, it's a private organization.
It's a private organization.
It's a private organization.
There is a lot of myth that CIBIL is a government organization.
No.
Viewers, once again, you have to hear out Harish. Harish, is it a government company?
No, it's not. It's
not government.
The parent
agency.
company is called TransUnion, and their product of this maintaining this credit worthiness for individuals as well as companies, it's called CIBIL. So it's actually
CIBIL.
a product.
It's a private company.
It's a private
CIBIL
company.
is a product.
Yes, CIBIL is a product.
Managed by TransUnion.
TransUnion.
So they got nothing to do with
nothing to do with government.
Governments.
Yes, and
Understood.
their pure job is to maintain the data.
Maintain the data.
Maintain the data that is sent by all the bankers.
Understood.
And there are all regulations in place. So even as an individual, you don't have to worry when you think that a private company is maintaining your credit data. But there are regulations and processes in place to safeguard all those things.
To safeguard the leakage of data.
Exactly.
So there's no leakage as such.
Exactly. So now from as we're talking about how as a business I can access the data, you can visit to the CIBIL website. They have mechanisms in where you can purchase the document. They have a reasonable cost associated with the report. You can either take a 1-month subscription or a yearly subscription and provide all the supporting documents that is required. Once you do that, you get access to the same data in a much better, it's designed much better, where you have all the information very clearly mentioned, and you can have that data to review your credit worthiness, and your accounting team can keep a track before they apply for any credit facility with any borrower.
Fantastic. So is there any step-by-step guideline available in CIBIL's website?
Absolutely. It's very, very simple and straightforward.
You said multiple steps. So is there any guideline that's available in CIBIL's website?
Yes, it's available. So there are 2 ways in which you can get that data. So they need to do the KYC in order to give you access to your credit worthiness information. So one way of doing it is they have a manual where you upload all the documents that are required. Like you give them your registration certificate, your GST and all
pertaining to businesses.
Pertaining to your business. And the other way is to do through the GSTN method, where that's a far quicker and easier way to get access to your credit report.
GSTN method.
Yes.
So there's a method
it's called
GST.
a paperless. It's called a paperless GST KYC, where the KYC happens when the CIBIL team in turn checks with the GSTN portal, does your KYC through that, and then comes back and your report is generated. That's a quicker way of doing it. The instructions, I think we can give it in the...
Fantastic. I think we will, viewers, we will push the links in the comments, which is available in CIBIL itself, as Harish said.
Correct.
So a step-by-step guideline to access your credit report or your commercial credit report. So you're suggesting every business to access it month on month?
Access. They should have access to it because that's something which will definitely help them before they apply for a credit facility.
Fantastic. So to have an understanding.
Exactly. Because as we were talking about, there are a lot of issues that come up that happen on this credit report. Some could be very simple technical issues, and some could be which would help you manage it better. Those are the things that will come. So we'll talk about that in detail later. Yes. So it's very
basically this helps me, be absolutely aware of what is my current status, whether I can access loan or not.
Correct. Exactly.
And if there are any issues, how to fix it and all, we'll dive into it later.
Perfect.
At least I have an idea.
Yes, that something like this exists.
Where I am. as to where I am.
Yes.
Fantastic.
So now that we've accessed our credit report, now let's understand
Superb.
what are the things that are there in the credit report. So initially, what you do is because this data is largely connected also to your GSTN portal, right?
Okay.
So they have clear visibility to in terms of your sales data. In terms of
they
sales,
also because they have access to GSTN.
Exactly.
So they also understand my sales.
Exactly.
Right.
So the first section that you'll find is a detailed summary of how your business is in terms of the number of credit facility that you have accessed, and even that credit facility further split into for what you had applied, like whether it's a term loan or a working capital or unsecured loan, all those things segregated.
So Harish, before we dive in there,
Okay.
So from an individual perspective, I've heard a lot about score.
Correct.
Is there anything
Exactly. So this report is designed for MSMEs which have a turnover of less than 50 crores, 10 lakhs to 50 crores. So they have
10 lakhs to 50 crores.
So anything below that and anything beyond that, you won't find a ranking. So they have something called a ranking where it's between 1 to 10. And
this ranking is applicable only for businesses who have a turnover range from 10 lakh to 50 crore.
Exactly. Not turnover, I'm sorry, access to credit. Access to credit between 10 lakhs to 50 crores. Okay. So anything beyond
if I have
that,
access to 500 crores?
Your report would be generated, but the ranking would not be generated. So you can still see all your credit facilities, the repayment pattern for all the credit facilities, but a ranking is not generated.
A ranking is not there. Viewers, once again, quote. So ranking is applicable only for businesses whose turnover or access to credit ranges from 10 lakh to 50 crore.
Exactly.
Now, what is this ranking?
So this ranking, it's between 1 to 10. 1 is considered excellent.
What is it called?
CMR ranking. It's called credit.
Is CMR?
CMR is credit MSME ranking. So primarily it's for ranking MSME industries.
MSME industries.
Yes. So it's primarily for so we consider anything below 50 crores as MSME. So it's primarily to create a ranking where it tells you from a top line perspective on how the business is doing overall.
Understood. So when you say MSME, it's all medium, small, micro enterprises.
Yes.
So the entire bandwidth gets ranked.
Exactly. And this rank is more of an indicator which tells you whether the company is doing well or it's struggling in terms of managing their finances. So
it ranges from 1 to 10. Now, what is 1?
1 is excellent. So if
1 is fantastic.
1 is fantastic. That means your revenues are on place, your loans have been serviced on time, and everything is in place. So that's excellent.
It's a great business.
Great business, and bank will be eager to lend. If your ranking is 1, bank should not have any challenges for giving you a loan.
So what is 10 then?
10 is extremely poor. That means
failing business.
You're not managing your business well financially.
Okay.
So it's extremely poor. That's where you need to focus more on getting it back on track. So anything below 6 is considered okay. Beyond 6 is extremely difficult. Banks don't lend if your ranking is beyond 6.
So as you're saying, up to 6, it's okay. So I can still access credit. Beyond 6, it gets very difficult.
So if you have to further break it up, so anything between 1 and 3 is excellent.
1 and 3 is excellent.
Yes. 3
I don't have to really be worried about my access to credit.
Exactly.
Okay.
3 and 6 is good. You're doing okay. You're good. Okay. Bank will still be willing to lend you.
Okay.
You may have some challenges in terms of finances, but you're still managing it better. So
Understood.
3 and 6 is good. Anything beyond 6 is extremely poor.
Beyond 6 is no access to credit.
No access. It's very difficult for you to get a credit facility if it's beyond 6.
Understood.
And that's where you'll find a lot of companies struggling to get a loan when their ranking is beyond 6. So that's why I said it's so much important for you as a business to keep an eye on to all these things.
Keep an eye on the ranking, no?
Exactly.
It is as to in which category I am.
Yes.
With this ranking, whether I can
get a loan
or not.
Exactly.
Access to credit is extremely important. If it's a cap-intensive business.
Very true.
And if my business cycles are longer, sales cycles are longer, credit cycles are longer, without access to credit is
correct.
Gets very, very difficult.
So just to add on to it, as you mentioned about business cycle, this entire ranking is based on one business cycle. Last 36 months of your credit repayment pattern is considered while they evaluate and give a ranking. 36 months.
36 months.
36 months.
So 36 months
is considered one business cycle.
One business cycle.
So that is what is considered for the ranking part also. So when your rank is generated, it checks your last 36 months of repayment pattern on all your credit facilities.
Understood.
Yes.
Fantastic. So viewers, I feel we have managed to give you a basic understanding of what a CMR is, what is the ranking, what are the ranges, and where you need to be. That is an extremely important aspect, where you need to be. So I think the ideal range is 1 to 3. That's where every businesses should be. So that's where that's an ideal spot to be in. And anytime one can access credit is what you're saying.
Exactly.
Okay. And is this the only thing that banks looks at?
No.
And is there a trouble? Even if I am in that range of 1 to 3, will I still have trouble in terms of accessing credit?
No, there are other parameters that the bank would consider, right? It depends on the type of loan, the project that you're into, and so the other things. But this is something
variations.
Yeah. But this is something that would actually make a lot of other things simple. Yeah, it would make other things easier actually. So when you're going for a project funding, this is something which would actually tell the bank that financially you have the discipline, that you've been maintaining it, and you're in a good condition, good shape.
Fantastic. So we understand what a CMR is.
Correct.
What is the next component?
So next, normally when you look at the report, what you see, as I said, first you have analysis. A broad analysis of all the consolidated data of all the credit facilities that you've availed, the ranking that you have.
Harish, you are being too serious here. You're not smiling.
Okay, ठीक है. Okay, ठीक है.
No, let's not scare our viewers.
Okay,
I think our viewers might feel that this CMR is something very scary. It's not scary, no, Harish?
No, it's not scary. No,
CMR is not scary, no?
It's not scary.
I know they are bound to be serious about the CMR.
Correct.
At least let's make it.
ठीक है. No issues. So we'll continue.
Yeah. This is also part of the video.
Oh, is it? Okay. ठीक है. So we were talking about what the report consists of. So initially, as we spoke, the first page probably would give you an understanding on total access to credit and the different segments all these loans have been categorized on. The ranking also, and in case if there are some of the loans that have not been serviced, the bank would have marked them as a delinquent. So delinquent is literally that you have not.
No, I mean this sounds like a technical word. What is
delinquent? Is where the loan has not been serviced on time. So there is a delay.
Because my understanding of delinquency is that criminal thing.
No.
There is one delinquency, no? Delinquent or something.
Correct. But normally this is slightly from a banking term.
Banking perspective. In banking context, what is delinquent?
Literally where you have not serviced your loan on time. So
being late.
Yeah, being late. You're not repaying the loan on time, and there has been a delay consistently. And after a period of time, the bank reports it. There are different categories in which the loan can be reported. So once that starts happening, that's where the loan has been reported as delinquent. And you will see right up front on the first page itself the number of your credit facility which are reported in delinquency. That is something that you need to address.
You are giving out a summarization, is it?
Yeah, the first page is purely summary. The first page will just give you a summary of this entire.
Literally a summary.
Exactly. So what to look for. So
they don't deep dive into loan accounts.
That is done further once you go into the report.
So I think this itself is enough for a business to
understand how they are doing.
So there is a summary.
Yes.
All the loan accounts are listed out there.
If you go further down, you will see the first one is just the count. It will give you the number of
only numbers.
The number of credit facilities you have access.
So for example, if I have 15 loans, it
will say you have 15 loans.
15 loans.
Correct. And then if one loan out of that is delinquent, it would be reported as one loan is delinquent.
There's a category called delinquent.
Exactly.
And out of that 15 loans, you're saying one loan, if it's delinquent,
not been serviced, yes,
then one loan
is delinquent. And so that actually is an indicator that there's something that you have to work upon. And you will also see a ranking there. It will tell you what is your ranking. So if you have one loan that is delinquent and on the basis of the complexity, you will be probably ranked 4, 5, 6 or... So definitely you can't be one if you have a delinquency.
Obviously, no, because that's trouble actually.
Yes,
I'm being late in terms of servicing one of my loans out of the 15.
Yes.
And other 14 are going well.
Correct.
Are there any other categories?
Yes, then subsequently you will see the category, the segmentation
in
of
the
each.
summary in the summary
yes,
itself.
yes. You
Okay.
will see the segmentation of these loans on what kind of loan have they been. Have they been working capital? Have they been unsecured loan?
The
Have they
product
been-
categories.
The
you're
product
saying.
categories. The product
Understood.
categories. And also, have you had any check bounces? It actually give you a detailed
Check
snapshot.
bounce as well, is it?
Yes,
Okay.
yes, yes.
Okay. The number of check
Number
bounces.
of check bounces. Number of check.
It's all numbers.
Yes, exactly. So it's basically a snapshot of your entire credit data. So in terms
Fantastic.
of numbers, it's you can consider more of like a dashboard. Literally.
Fantastic.
So
It's like a managed MIS, no? Management
Exactly.
Information Report.
exactly.
So viewers, I think this is the thing. Even if you do not have time to to look through the entire report, you just have to look at one CMR ranking,
First page, the first
CMR
page of the
ranking
report
and the
itself
analytics
will-
part or the summarization part, where you literally have access to numbers
Exactly.
in terms of how many loans, in terms of how many delinquencies.
Yes.
That too deep categorized into number of check bounces. What are the
Yes.
product,
Yes.
products
Yes.
that one has access to, and
Correct.
all the other information
Yes.
in the summarization itself
Correct.
from a number perspective,
Yes.
which is easy to understand.
Exactly.
Also,
So that itself would give you a clear
than a
indicator.
lengthy explanation.
Then you have subsequently the detailed report, the detailed data
Post
associated.
this summarization.
Yeah, post summarization. So then you have the ranking. They give you the reason for that ranking. So it's very important to understand why I've been ranked. Whether if I've been ranked 5 or 6, there is a reasoning.
Oh, they explain the reasoning also. is
Exactly.
it?
There are quotes that have that would be given for each entry. So they would have, so some, it might say that you
So
have
one example for ranking low.
So high utilization, it would say high utilization basically.
Okay, now
That's
what
one of the
high
indicators.
utilization is?
High utilization, it means that you've actually overutilized your CC facilities or the OD facilities. You've been always going beyond the
Maxing
100%.
out like a credit card.
Yeah, so beyond 100%. So that if that's
Understood.
happening, if that starts happening over a period of time, then that could be one of the reason for your ranking to be low.
So viewers, so why you have been ranked low is also reasoned
Clearly
out.
mentioned, yes, exactly.
Clearly mentioned. So if you have, I think this way there are a number of reasons.
There are different
Number of there
yes,
are different
yes, exactly.
kinds of reasons.
Exactly.
And he gave an example of one of the reasons also, which is high utilization.
Yes.
So I think in the subsequent videos we should be able to cover these reasons.
Yes, we can talk them in detail on what exactly they mean. And then if you further do a review, you can clearly identify which is the loan that is contributing towards that reasoning. Then all you have to do is work on that particular loan facility to improve your ranking. So this is how
Fantastic.
you approach when you want to fix your credit report or a CIBIL commercial credit report.
Fantastic. So they have given all the necessary indicators to
In the
derive
report.
insight from the report.
Exactly.
But we should be aware enough or capable or knowledge enough,
Exactly.
have the necessary knowledge to draw the insights and action upon it.
Yes.
Understood. So if somebody comes to you, you should be able to reason them out. Correct.
Correct.
No, looking at the report, you should be able to reason them out as to, boss, this is what is hurting your report. These are the things that we need to do to fix it.
Correct.
Right? No, if
Exactly.
somebody comes to you.
Exactly.
Fantastic. One is the ranking, then is the summary.
The
comes
summary, then you
reasoning
have
part.
the ranking. Summary, then you have the ranking. Then you also have details.
reasoning part.
People who are associated with the businesses, the directors, the signing authorities, the data of their data. All those things are present in the report.
The directors associated
Yes.
with a particular business. Only the
Exactly.
directors or anybody else
Everyone who's been a signing authority for that business. So all their
who
data.
have signed on the loan applications.
Yes, exactly. So
all the detailed information.
yeah, their detailed information.
Guarantors.
Everyone's information would be there.
Okay.
Then you have the addresses, the registered addresses.
When you say director information, it's name, contact number.
Name, date of birth, address, email ID,
Okay.
PAN number,
Okay.
all those information would be there.
If can misreporting happen in terms of this
A lot.
information?
A lot.
So some random guy can reflect there.
Yes,
Or
at
is
times
is
it
that
does
a
happen.
possibility, or somebody who is not a director can reflect there.
At times it does happen because a lot of these are all clerical errors which happen at the bank level where probably someone may have sent a wrong information to credit bureau. So all these things can happen. This does not affect the ranking per se, but
Understood.
overall, if you think that that data is incorrect and probably could be misused from a different place,
Okay.
Because this entire data is your company's financial data. So if you
Right.
think that that data could be misused, it's important that you get all those things corrected.
So you should also have a view of who are the directors, who are the guarantors,
As per
who
the
are
credit
or
report.
who are the people that's reflecting in my credit report.
Exactly.
If somebody is a random guy, if somebody is not there as a director but still he is reflecting,
Correct.
then we need to flag it.
Correct.
Understood. If we move on, then
Yeah, further down is where you will see a list-wise details of all the accounts in terms of all the open credit facilities that you have, where you'll just find it in the form of a list where you have the bank name, account number,
Understood.
and category, if that loan has been categorized, if it's standard, or if there are other flags that have got attached to it, and a bit of repayment history. So you'll find all your loans.
It's a list of loans.
List of loans. Yeah, it's a list of loans.
Bank name, product name.
Yeah, bank name, product name, and if there is any flag associated with the particular loan. So it will just give you a brief idea on which loan to look into further.
Oh, in that also.
Yes.
Because see, I mean, now I get the point, viewers. So a business will have they can have hundreds and thousands of loans.
Correct.
It's very, very difficult to look through the entire report.
Exactly.
So this is where I feel these credit reporting agencies are making it easy.
So you can quickly go through the loans and identify if there is any loan that's misreported or it's affecting your score. Then you go further. The next section actually tells you about that in detail, about each
one of those loans.
Each one of the loan. What is the sanction amount, when it was taken, what is the rate of interest, and are there any overdues, and you also will see a last 36 months repayment history of that loan. So if there are any delayed payments that have been reported, the entire summary of that loan in detail will be provided further down for each of the credit facilities that you have.
Understood. And as we discussed, for that they have given all the tools to reach the right loan account.
Exactly.
And access or identify the issue in that particular account.
Correct.
So they have given all the tools in the report itself.
Correct.
But one should know how to read that report.
Correct.
Otherwise, he'll be searching eternally.
In different places. Yes.
Searching in different places.
Yes. So
amazing. Got it.
This is where you need to spend more time. Your accounting team needs to spend more time to identify if there are any things that are going wrong from their side. Then they can immediately work with the bank, get it fixed. If they see any misreporting that's happening, they have to know.
So can you give an example in terms of misreporting? You have seen so many reports.
Correct.
Please let's give viewers one example. Maybe we will dive in later in our later videos. But let's.
So in a lot of cases, what happens is bank have different. Not every bank reports at the end of the month, so they have different timelines in terms of reporting.
Every bank has different timelines.
Yes, they do it. They do it once in a.
Do they? How many? What is the frequency of reporting?
Could be 30 days, could be 90 days. So between 9,
Oh, it can happen
once in a quarter also.
Days.
It can happen once in a quarter also. And within this, what happens? There are a lot of challenges where they would have reported something incorrectly. Post that, you would have got it sorted, but that correction is not reported to the bank, reported to the credit bureau.
Like for example, internally with the business and bank, it's done,
but not reported to the credit bureau. So these are the things that actually, and from a credit bureau's perspective, they've calculated your rank based on the previous data that is existing.
Correct, exactly.
So that is where you need to be sure that if there is anything that is that you have actually sorted out with the bank, make sure that actually that is communicated to the credit bureau also.
So how a business can make sure, because bank is doing it, I think it's a technical system, no? The communication between bank and CIBIL.
Correct. It's a technical system. As I said, they have their own.
And how a business who has no clue what is the transaction that's
so there are methods in which the CIBIL also gives you a way to raise some issues with them, saying if you feel that it's reported incorrectly, where you notify CIBIL that this data is incorrectly reported by the lender. So in those kind of scenarios, what happens? The CIBIL in turn will recheck or verify that information with the lender. If what we claim is true, then that correction would be made.
Oh, again here it all boils down to the same fact that, boss, you have to access your report at least once in a month.
Correct.
to identify
and the
things.
core fact point there is, at the end of the day, that's your data. You need to be on
Correct.
top of it.
Absolutely.
Not rely on the banker or CIBIL to tell you or come back to you later. It's your information.
Correct.
So you need to make sure that it's accurate at most of the time, or engage professional services like Kenstone who can help you manage that in a very effective way.
Fantastic. Absolutely. I mean, as you rightly said, it's not the bank's data. It's neither the bank's data. It's nor the CIBIL's data.
It's your
my data.
Exactly.
It's the business's data. And it all, I think we should be, wary of the fact that all these misreporting can happen.
Correct.
Or anything can go wrong. So it's good to be preventive
Yes.
than, suffer the consequences of not accessing the report at all, or not being aware of the existence of it all.
Exactly.
And I think there can be clients who would have reached out to you after rejections, not being aware at all.
Most of the cases are like that. Where they only realize that there is something like this after the loan gets rejected.
Amazing.
But again, what happens is this entire exercise, it's a time-consuming exercise of getting things corrected on CIBIL.
What are the typical timelines?
Typical timelines is like 30 days, and it can go up to 60 or 90 days also on case-to-case basis.
90 days.
Yes, in few scenarios.
The business.
Exactly. So that's why it's so important for you to be proactively monitoring this information rather than react to the scenario when your loan is rejected.
Oh my God! At least from an individual perspective, I can understand.
Correct.
If it might be a personal loan or a housing loan.
Correct.
Value will also be small.
Yes.
And stakes will also be
very true.
Limited.
Yes.
Here the stakes are high.
Exactly.
Stakes are high.
So even one rejection of a credit facility will actually take the business in a spin. So it's so extremely critical that you maintain this information accurate.
And I'm thinking for a business which is not doing great at all, going through a lot of trouble is on one side. But if I put a business which is doing great but unable to access credit.
Exactly. And due to some technical errors
that can also happen, is it?
A lot. That's what I was trying to tell you. So there are a lot of technical errors that can happen on a CIBIL report, which could be contributing to your ranking, and you only realize it when you're applied for a loan. But in reality, you as a business might be doing extremely well. All your servicing of loans would be on time, but some small error is actually blocking you from getting access to credit. So these are the scenarios I think as a business owner you should be looking onto and keeping an eye on that.
Amazing. I think accounts team or their finance team.
Exactly. That's something that they should be doing.
They should be, really, mindful of this fact. And whenever, I think they are the ones who would be doing all these project report and all that.
Exactly.
And they'll be projecting their future finance requirement also, or future funds requirement.
Correct.
And they'll be categorizing it into debt and equity also.
Correct.
Whatever that gets categorized into debt, they have to access it from banks only, largely.
Correct.
If they're a 100 crore, 50 crore company.
Correct.
And they'll have a clue as to how much they are going to access it.
Correct.
I think this acts as one of the key aspects, no?
Exactly.
The CMR acts as one of the key aspects. If they're not mindful of this fact, then I think, as you said, it's a disaster, literally.
Correct.
It's literally a disaster.
Correct.
Fantastic.
So from report perspective, this is all you get. Further, you also have...
And sorry for interruption. So to our viewers, our businesses, what are the kinds of issues that can arise? I mean, in general, I'm saying we'll dive deep in. Broad categories I'm asking.
So broadly, see, there could be some issues where you have actually defaulted on few loans. Later on, you worked with the bank and you've resolved it, but that correction is not reported to the credit bureau. That is one major factor.
I'll just once again repeat. I've taken a loan.
Yes.
I've defaulted because of XYZ reasons, but I've defaulted is what you're saying.
Yes.
Or been delinquent.
Correct.
In your terminology.
Correct.
So, but later I've paid, closed.
Correct. So
the same has not been reported to?
Yes. Because during delinquency, a bank reported to credit bureau because it's a way of telling the other lenders that this loan is at risk. This borrower has not been repaying us on time.
So they are flagged.
So they flagged it. But post correction, or post when the borrower has actually reached out to the lender and resolved that particular loan, that reporting not happens in a lot of cases. So that's where there is a challenge in terms of affecting the ranking and things like that. So this is something that you as a business owner should be mindful of it and get it resolved.
But I'm
upfront.
thinking that I've paid and closed.
Exactly.
I've paid and closed.
Exactly. So that is one thing.
This is great. And how long, broadly speaking, how long it takes?
No, so you can go. Normally, the CIBIL team have a SLA of 30 days for any ticket or a dispute. They call it a dispute, where you dispute certain aspect of the report. So if you raise a dispute, the SLA is of around 30 days.
Fantastic. 30 days.
Correct. 30 days to resolve.
So I have to run from pillar to post for 30 days.
Exactly.
Unless I understand, then it's trouble actually.
True.
It's trouble. And what are the other category of issues?
So other could be again technical errors where technical errors where there have been some wrong data sent by the bank. So these are the other aspects of it.
So wherein it's not the challenge of business.
Correct.
Business is doing great,
but some information,
paying on time, everything is going great.
Correct.
Thinking that it's going great, but due to some technical issue, some random thing is getting reported to reports, which can hurt, is it?
Exactly. And see, as I said, this entire reporting happens right from a firm which has access to credit from 10 lakhs to 50 crores.
50 crores.
So you can, again, in terms of companies that can access, just imagine a sole proprietor firm can also have access to this kind of
absolutely
right. So you might be thinking that I'm just a sole proprietor and I'm least bothered about my CMR.
Correct.
That is where you'll have all these challenges, and especially when it comes to a sole proprietor firm, a lot of data gets mixed up on CIBIL itself because due to the name of the firm and things like that, you will suddenly
sole
see
proprietor is an individual
running
company.
a business. Yes.
Individual plus company.
Correct. So on their CMR, the biggest challenge, that is one of the biggest problem with that, they will suddenly start seeing addresses and accounts that were never associated with their company. This normally happens due to the data mismatch happening on the CIBIL side. It's not even the bank's mistake here. Side. On CIBIL side
because
itself,
both an individual and company is involved.
Correct. So that happens, and this can be again rectified. Again, if they have they see their report, they'll be able to clearly identify the data that's not
what belongs to them and what doesn't belong to them.
And they have to report it to CIBIL saying these are information that do not belong to me. And once CIBIL do the verification of it, they get that corrected on the report.
And is there a guideline to access this mechanism in terms of telling CIBIL that this account does not belong to me?
They have a way to raise all these disputes and
these are called disputes. And we have to raise disputes.
We have to raise dispute. Actually, when you buy a report or when you purchase your CIBIL report, the last section of that report actually tells you how to raise a dispute.
Oh, there is a way section.
Of doing. Exactly.
So they have in detail, they have explained.
So clearly it's mentioned on how to do, and all those things are clearly mentioned there itself.
But somebody has to really sit on it, understand all the aspects and draw the insights, and also go to CIBIL to fix all these issues.
So you have to communicate to them in a proper way so that they understand it, make the necessary changes.
Communication with CIBIL also matters.
Exactly.
In order to communicate, I have to first understand.
So that's where I think it's important for you to first spend more time in understanding your credit report or engage people who can help you with that.
Understood. I mean, this is where the necessity of an expert like you comes into picture. Now I get this point. So even to communicate with CIBIL or bank, first I have to understand what is the issue.
Correct.
And that issue will also have multiple implications. There are multiple implications, so which I would never ever be able to figure out.
So even as I said, every ranking, the data is in front of you, but how you read that data is what is important. Like Absolutely. They will give you the clear reasoning.
Read between the lines. No? I mean, it's not just read between
so the clearly lines. Even the reasoning for the ranking would be mentioned on the report. So it's so now you have to understand which account is actually affecting those affecting the ranking. That's where you need to spend some time or work with people who can help you out with that.
Fantastic, Harish. I feel I think we have been able to throw some light as to what a CMR is, and what are the ranges, what is a good ranking, and it also has an analytics dashboard which will literally tell the business owner in terms of numbers, to where the challenge is,
Correct.
and which loan account he has to look
Exactly.
to, and where the issue is, and all those aspects, and also the broad categories of the kind of issues that can arise.
Correct.
CMR, which can literally hamper the business process itself, or the
Correct.
cycle itself,
Correct.
and it can pull the business down. So
True.
for a business, money is important.
Correct.
So fantastic. So viewers, in our later videos, we're gonna deep dive into each one of these sections and identify all, read out all the aspects of each one of these sections, and also the implications. I mean, in terms of what are all the issues that can arise in each one of these sections, and what are the implications. The major implication is you not being able to access credit.
Correct.
That's the umbrella term, wherein you are finding it difficult to access credit.
Correct.
But these implications, how it can impact your ranking internally, how it can impact your ranking, and all such things would be detailed upon.
Yes.
And we will also help you with all the links. Harish will be able
Absolutely.
to
So
visit
everything that
Sybil,
we spoke about, the reference links, everything can be
reference
provided.
links, reference information. This will really make you aware as to what a CCR is, what are the aspects, and everything, literally everything about CCR.
Correct.
So fantastic, Harish. And do you have anything further to add to it? Further and I mean, what do you tell a business owner in terms of CCR?
No, I think
as a single line.
I think we've discussed this before. It's extremely important as a business owner or your accounting team to have access to this data.
Okay.
Upfront.
A lot of them will not access only.
Yes.
Correct.
Yes. So you need to have a visibility to this on a month-on-month basis and make sure the data is accurate. So
Fantastic.
that is something that you need to keep an eye on.
If they say that, Harish, can you do this?
Absolutely. We can definitely help businesses do that.
So can you help businesses month on month in terms of
Yes, we can.
Oh, fantastic.
So we do have that.
Do you have any
service.
program as such?
Yeah, so we do have the annual maintenance program where we do a review of the report on a monthly basis, give them a summary of the entire data, and based on their feedback, if there is anything that has been misreported, we work with CIBIL and the banks and get them corrected. So we make sure that their data is accurate at any point of time.
Fantastic. So users, we also have a credit annual maintenance program.
Yes.
Wherein you help businesses maintain their CIBIL basically.
Correct.
As a preventive action.
Exactly.
Than a reactive mechanism.
Very true.
So we're gonna do everything possible to create awareness and do everything possible so that you can do everything all by yourself.
Correct.
If you do not have bandwidth, so then Harish can help you out.
Absolutely.
That's what I would say.
Absolutely.
Fantastic. Thank you so much, Harish, for being here.
Thanks.
So I think in all our future videos, we're gonna dive, let's dive deeper into all of these aspects and create awareness to the users. So thank you so much, viewers, for signing in. Keep watching, keep helping, leave all your queries in our comments. We will do everything possible to answer all your queries in a most simplistic way possible, because these are very, very technical. It gets difficult, if we make it too technical. So we will do everything possible to make it as simple as possible. Thank you so much.